going back into that good old question, is the stock market going to bubble out? Well, in this video, I'm going to break it all down for you so you understand exactly where we are with all this madness that is happening across the board. So if you are new, welcome to Traders Reality. My name is Tino, and let's get with the idea of what we're going to talk about today. So, is the stock market going to bubble out? Well, the last reading on this chart, which I know you guys have seen me mention before, came in at 0.35 on the ratio. Happy days. Well, what is this ratio? It's just the margin balance ratio, which tells you how much money are investors actively borrowing on margin and putting it to work. Let's go and have a look at the latest reading. Well, ladies and gentlemen, looks like we've got a reading of 0.42. Now, every time it goes above that 0.4 region, according to this chart over here, this is where we start getting into bubble territories. So we go over and have a look. The last reading over here at 0.42 was where the stock market topped out in October 2021, and then it started to pull back. Go again, you can see the stock market topped out in January 2018, and it started to pull back again. Topped out over here in April 2015, and then the stock market drops down again. With the current reading at 0.42%, you can see that this big spike up tells you that investors are rushing into the marketplace at the fear of missing out. You can't blame them. Look at the stock market, making a nice climb to the upside with all the tariffs that are coming into play. I mean, do I need to even mention anything else about the tariffs? Donald Trump has decided to now slap a 35% tariff overnight on Canada. And if they dodge them, another 40% fine. I mean, this guy is absolutely killing it. If we just go over and have a look at USD CAD to put things into perspective, you can see that USD CAD is starting to make a nice climb to the upside with the retrace. And the logic says that now that this tariff has come into play, it looks like USD CAD is getting ready to make a nice breakout to the upside. But when you think about it, look what's going on the US dollar. The US dollar is looking like it's coming away from a nice structural pattern. W formation, rise, retrace level 1, continuation to the upside, which means that this drop to the downside, of course, it came in on the plate from the news that happened last week with regards to the non-farm payrolls. However, when we go back into it, we can see that this is a dip buying opportunity for participants with the US dollar. Why? Because they were able to exploit the idea that euro became very expensive at this point, which meant that they were able to transact with less euros to obtain more dollars. Back to the topic at hand. According to Michael Brown, it says that it seems like this is a bull market that you just can't keep down for especially long. Now, listen, this is the logic. As it stands right now, from a smart money, dumb money perspective, the smart money indicator has hit an extreme. And I've said this, when it hits an extreme, this is where we expect the market to start pulling back because smart money sells when prices rise. Now you can see it's come back up very aggressively, which means that the fast move up of this blue line here tells me that smart money has decided to buy on the dip. And we know that there is a dip because look at the stock market. NASDAQ took a big dip to the downside over from last week, and now it's equally made the return back up. So that tells me that the stock market participants are actively now selling stock. That means as it's rising, because you only sell something of value as it goes up. Now, going back to the idea of this story here with regards to margin balance ratios, according to this gentleman over here, margin debt surges 9.5% in June to a record high. Says here that that's more leverage than at peak of the dot-com bubble or 2008 crash. This is the most dangerous signal in the markets right now. Now, I will tend to agree with him on this, but you've got to consider that we are at an extreme ratio right here, which is consistent with the market reversing historically. However, when you go back to this chart right here, you can see that if we were back in 2020 and we saw this level right here, we would be saying exactly the same thing. Margin debt has just hit whatever 600 billion, the highest it's ever been. What happens? The market contracts, resets aggressively, and then equally makes an aggressive return back up. But what's the key thing that's keeping this thing going up? People's risk tolerance, but the fact that the interest rates are still high. They're still expecting them in September to get cut at 4 to 4.25%. Only readings that come out from now in terms of economic data will actually trigger investors to be edged towards the idea of keeping the rates at the current level of 4.25, 4.5%. But most are on the belief that it's going to get cut by only 25 basis points. Going into today's data, you've got the ISM PMI coming out, and that is showing a sign of a expansion at 51.5. Expansion is above 50, contraction is below 50. And what does this reading tell you? Tells you the survey of 300 purchasing managers, which asks respondents to rate the relative level of business conditions, including employment, production, new orders, price, supply, deliveries, and inventories. So if we do get a reading of 51.5 or better, tells you that purchasing managers are all good about the economy. So there's no issue whatsoever now, is there, with the economy? But the idea is that everyone's doom and gloom on the idea of margin balance ratios moving up. Hold on. Moving up aggressively. Sorry, I just thought that updated. But it's moved up aggressively, which has got people concerned that we're at high margin levels. But let's just try and back up this guy's story for a split second. Look at the stock bond ratio. It is showing that stocks are overly valued in relation to the bonds. Now, when it's towards this red line, stocks are overvalued in relation to the bonds market. When this blue line comes down to the green line, it means that bonds are overvalued in relation to the stock market. So primarily, when you look at this chart, you can say, okay, then if this blue line is all the way down to the green area here, I know that bonds are heavily valued or overvalued in relation to the stock market. That's where you look for stock buying opportunities. Going over into other metrics, you could then go over to the volatility index. And you could say that if this thing goes all the way up to 30 or plus, that would then give you the idea that investors have aggressively hedged themselves against exposure, which is, as the old saying goes, when it's high, you buy. When it's low, you hold. But primarily when it's low, you can get yourself ready to start shorting, because as this thing goes up and it starts to trail above 30, that's where you should be looking for buying opportunities. An example right here was when we had this big pump to the upside in regards to the story of tariffs, which did send the markets to the downside, which equally led to this correction on the NASDAQ over here back in the day, which was this big drop to the downside in April when Trump came into power and says we're going to do tariffs, tariffs, tariffs. Speaking of the stock market itself, looking at the NASDAQ, you can see that we had a gap down over the start of the week right here, which yesterday was managed to get recovered. Now, something I want to draw your attention to. You can see that the volume on the bottom right here is showing us that it is coming in on higher than average volume, but it's less than what the previous few days of trading activity was showing. You can see massive volume coming in here, but if the sell side volume is not as aggressive as the buy side, then that would then tell us that this bull market still has got some steam to go. Jumping over to cryptocurrency, it says here that the White House to penalize banks for debanking crypto and political clients, which is kind of good, really, because we want as many people as possible to be getting involved in cryptocurrency. Speaking of which, the ETF balance has now actually been reduced. It's now gone down to 738,488 from a high of 741,000. So we have seen some activity on the ETF itself. We'll just quickly go over to that bad boy and have a look at where we are. So yeah, you can see that the Arkham isn't updating it in time, but we are seeing some activity going off over here on the ETF. But Grayscale's always doing its maneuverabilities with this. But quickly going over to Bitcoin price action to put it into perspective, you can see over here that Bitcoin's doing very well to hold out inside of this range right now. It's doing a very good job of consolidating within this range, and there seems to be a lot of support coming into play with regards to this vector candle region right here, and everyone across the board is expecting cryptocurrency to make a bold move. But just going into the metrics as well, we've seen some instant recovery right here. Now, people would have saw this and said, oh my God, Bitcoin is dropping. But when I use the Coinbase Premium Index, I pay attention to when it goes red, because that's when we are looking to buy. As I said earlier on, when we're looking for buyers, we look for when price drops. When price drops, we pay attention, okay? Now, to back that logic up, I took the same trade this morning. Where are we? Where's my trade? Here we go. So I took a trade this morning on Bitcoin to through BTCC. And here we go. There's my trade history. Right. So here is the trade right here. I took the trade this morning on Bitcoin at 114,234, and I closed off at 114,516. Now, this is what I always do. I always trade Bitcoin and I always trade Ethereum together. Why? Because Bitcoin moves slow and Ethereum moves fast. Now, equally, when I took that entry point, you can see that was right there, right on the nose at the entry. Why? Because I buy when it drops. I buy when the bids come into play. If we go and have a look at the Bitcoin bids from this move to the downside, you can see clear as day what they had done. Look at all these bids that were coming into play over here. The bids were coming in, and of course, it's not updating just yet. Give it a second. There you go. So all those bids were collected, and that was the point where I decided to say, right, they're going to start offering price higher because they have collected a reasonable amount of bids in this zone. Always pay attention to when price drops, because that's going to give you the clue where the buyers are stepping in to effectively try and offer Bitcoin's price to the upside. It was in this area right here. If we go into the smaller time frames where I was paying attention to it, we were looking for Bitcoin to make the move from this zone right here. So right in this area there with the red vector candle, they came and swept the Asian session low over here, New York low, and then they made the reversal back up, which netted us a nice little return of $600 right there. And I copied exactly the same trade over to Ethereum, and we managed to get ourselves a $1,869 move from 3,625 to 3,648. Yeah, I do put a bit of leverage, ladies and gentlemen, but I have a high risk tolerance and I'm ready to just take advantage of the move. And that was the play right there. Now, obviously, I trade on BTCC, but the reason why I trade off BTCC is because you get the option to trade various other markets as well, which I do recommend you do because you've got the option to trade the NASDAQ, the S&P, you can trade gold, and as a hedging platform, you really do get the benefit because even though cryptocurrency sometimes doesn't make nice moves or big moves as much as we want them to, you are always going to see big moves with the NASDAQ, always going to see moves with gold, and also you do get the option of trading Forex on BTCC. So if you do want to trade on BTCC, get into the description, use the Traders Reality link, and you get a 10% bonus depending on what amount you actually deposit through BTCC. And it's also free from KYC and VPN. Quickly going over yesterday's trade setups that I provided for the Platinum members. We had a relatively decent day, to be fair with you guys. We go over to the Euro and we can have a look over that bad boy. And we can see that Euro yesterday, it didn't really do such a big move up from yesterday's open, as you can see over here. It was very condensed, but this is usually the case when you've got a pending decision in regards to the interest rates with regards to the dollar. Now, going back over into it, we can see that gold, we wanted to see gold make a nice little move to the upside to claim out the imbalance zone. Quickly going over into gold, and you can see that gold yesterday made that nice clean move to the upside. Our entry point was in and around this range right here, and we saw the success of the trade going over towards 3,385. And then, of course, we wanted to see that 3,398. So we missed it off just by a little bit, but the guys would have made a little bit of change on that bad boy and on the principle of vector candle recovery. Going over to the NASDAQ, I think that was the star of the show. We managed to capture the low, and this was a V-shaped reversal with the idea that we were expecting to come back into this vector candle recovery point right here to go into this volume profile region, which would be deemed as an area of resistance. Wanted to see the 23,475 going over into the NASDAQ, and you can see from yesterday, they just made that nice clean move up, and then towards the end of the close was 23,353 going into the top side of 23,300, nearly 23,400. So in essence, we cleared out this first target right here of the 200 EMA, and then there was a little bit for them to try and grab at the high average weekly range. And then going over into cryptocurrency, Bitcoin came through nicely. We wanted to see Bitcoin make the break above towards the first target of 115,868. And then, of course, Bitcoin did its usual business, made the move up, but then it was very short-lived, came to 115,722. And then we wanted to see that break up towards that region up there. So it was very close to that TP. And then we didn't quite get that point up there, but money was made on the retrace down below over here. As you can see, they came into it, nice little sweep down below, and then made the reversal to the upside. So if you caught that move, you'll be looking at effectively a $1,500 move in Bitcoin, which is usually what I recommend with everyone when it comes to trading Bitcoin. Now, quickly going over into Ethereum, wanted to see Ethereum do the same thing. Wanted to see the nice break up towards that 3,648 as the target profit. Go over to Ethereum, and you can see over here that she made a beautiful move yesterday. It was a nice clean move up, 2 p.m. UK, straight into the flavor, went all the way up towards the top end of 3,737, and we wanted to see a target of 3,789. So they made their way towards that point of control, but it just missed it ever so slightly, but we would have made some nice flavor on that move to the upside with Ethereum. And Solana was a little bit difficult as well. She made the move, well, we wanted to see her make the move towards the volume profile range between the 170 and the 169 zone. Our target, it's in principle, was the 169.52, and we go over to that, and we can see it came up ever so slightly towards that point, top side of the zone right there at 170. So she made the nice little move up towards that 169.77. Now, to finalize everything, guys, the story today is we have some data coming out at 3 p.m. UK time, which is 10 a.m. Eastern Standard. And what I recommend is that you do wait for the data to come out once it does reveal where we are with the economy. But quite frankly, because of what's going on with the Federal Reserve and all that story with interest rates, even though they are expecting the stock market to pull back ever so slightly, I think we will get retracements in the marketplace. But until we get the Fed pivot where the interest rates do get cut, I don't think the stock market is going to stop anytime soon. With that being said, guys, mad love and respect, and I'll be tuning into you all tomorrow. Peace.